Hello, I'm Alex Davies, founder of Wealth Club. With me today is Mark Taylor, partner at Beringea and manager of ProVen Legacy. Hello, Mark.
Morning, Alex.
Hi, Mark. Perhaps just start off by telling me a little bit about Beringea and who they are.
Yes, well, Beringea are based in London and Michigan, USA, and we've been founded and around now for more than 25 years with over $600 million of funds under management, 17 investment professionals across the equity and the debt space, and a combined portfolio of more than 60 companies. Here in the UK, we manage two successful VCTs with over £220 million of funds under management, both of course listed on the London Stock Exchange. ProVen VCT, which was founded in 2000, and ProVen Growth and Income, which was founded in 2001. And we have over 7,000 shareholders in those.
So you're here today to talk about ProVen Legacy. What exactly is it and what does it do for investors?
Well, firstly, ProVen Legacy was set up by Beringea following requests from some of our shareholders. It's designed to shelter inheritance tax using the well-established business property relief rules, primarily lending to UK SMEs. ProVen Legacy looks to achieve a minimum targeted annual return of 3%, but hopes to achieve 5%, in the same way that our VCTs target 5%, but have achieved more than 7%.
Okay, and of course this is a relatively young company. It's probably less than a couple of years old. So what experience have you had doing this sort of stuff in the past?
It's a good point. Well, we're a very experienced debt team. Myself, I qualified as a chartered accountant with top firm Moore Stephens, worked for Barclays, and then moved to what we then called a merchant bank, Kleinwort Benson, where I ran the finance team. And I set up for Kleinworts in 1998, Europe's first venture finance business. Later I moved to Noble Group, where I established two funds in 2003 and 2007. And finally, before Beringea, I joined Clydesdale then part of the National Australia Group to launch their growth finance business. So 30 plus years of lending experience for myself, which the last 18 have been in the venture and growth finance space. And working with me is Hilary Weatherstone, who's over 20 years of finance experience. She worked with me at Kleinworts and then was at Barclays, Ernst & Young and Lloyds Banking Group, and joined me at Beringea in 2014. And Chris Bone, who has 10 years of experience, firstly at the Bank of Scotland and then with me at Clydesdale, and he joined Beringea in 2016. So a very experienced debt team.
Okay, and in terms of the loans you're making, what sort of companies are you loaning money to, and how long are these loans typically for?
Well, the principal strategy of the company is to make loans to a variety of small and medium UK private companies. Common features of the loans are they'll be asset-backed or they'll be predictable revenue streams. We're looking for companies with a proven demand for the company's products or services and, of course, a strong management team. The loans will usually be monthly or quarterly repayments and over a 3 or 4 year term.
Can you give me a few examples of companies you've loaned money to?
Yeah, so earlier this year, Soloxica, a company backed by Goldman Sachs, Credit Suisse and others, in March, £250,000. It's a 24-month term with monthly repayments at 9.3% return for legacy. And then Kagura, backed by the ProVen VCTs in April-May this year for £500,000, a 36-month term with monthly repayments, 9.5% return for legacy. And we're just completing another loan next week for £500,000 with a 10.4% return for legacy.
With legacy and your other work, any particular successes, the things you're particularly proud of?
So for the VCTs, we made some 10 million of loans, and 3 of those businesses have already been sold. Pirius, which we completed in 2014 for 1.2 million, was sold in August last year and generated a return for our investors of 10.7%. Speciality European Pharma, which was completed in 2015 for 4.75 million and was sold in May last year and achieved a return for investors of 9.3%. And lastly, LinkDex, which we completed in late 2015 and early 2016, but was sold in August last year and achieved an IRR for investors of 15.5%. So overall, a return of more than 11%.
Okay, so lots of successes. Are there companies you'll avoid?
We would certainly turn down businesses that we think are too early, where they really need further equity, where the management team doesn't give us enough confidence, perhaps where the revenue is not diverse enough or certain enough, And finally, where the business is in a space that we don't understand or we feel is too exposed to rapid change.
Obviously, over the last 10 years, getting money from a bank has been difficult. Is that changing, and is that making it more difficult for you to do your business?
Well, do you know, it surprised me actually that as we've moved away from 2008 that the banks haven't come back more into this space. And in fact, we find that companies are very willing to talk to us as an independent and experienced investor rather than perhaps go to their bank.
Okay. And where are you typically getting your deals from?
So we use both our own personal network, which is extensive, and of course Berengea's. Beringea is seeing a number of companies almost on a daily basis actually, and it's through this network, which means that we'll often know these companies quite well.
ProVen Legacy is still a relatively young company with not a huge amount of money in it. If I'm investing in it, obviously I'm concerned about liquidity. You know, I might want my money back, or if I die, then my heirs will want that money. In such a small fund, how do you ensure there's still liquidity?
Well, I think it's a good question, and what we've done is focused on some smaller transactions at the outset, so 250,000, 500,000, but also importantly with monthly and quarterly repayments, and that keeps liquidity high within the company because then you can relend that money.
And is there any particular time frame that investors should expect their money back? Is there any guarantee you give them that they'll get their money back in, say, 3 months, 6 months?
We do redemptions twice a year actually, at the 30th of June and 31st of December, but I'd expect the company always to be open to a request for redemption at our discretion.
So it all sounds great. I invest in this company, hopefully I live for 2 years, it's IHT free, but you know, what are the risks and what do you do about them to try and prevent them?
So I think the key thing is to know the business, know the management team, know the sort of loans that you want to make, stick to your knitting as it were, and stay close to the companies, and that's really the way in which we've operated.
And finally, so I've got some money, I want to shield it from IHT, why should I invest it with you?
Well, I hope in what I've said you can see that Beringea have got a good track record as an investment manager and advisor. The setup of ProVen Legacy is very simple and transparent. We have 2 independent directors from the wealth management sector. Jamie Perkins, our chairman, is a founder and partner at Westminster Wealth. Robin Chamberlain is a director and founder of Progressive Strategic Solutions. And the strategy of lending to growing UK companies is well supported by the British government. And finally, really, the interest rates we've achieved on the initial loans support the likelihood that Legacy will overachieve on its targeted returns.
Thanks very much, Mark. Mark of Beringea, thank you.